It's time to bring in our next guest. That's going to be Bill Baruch, president at Blue Line Futures. Welcome back to the show, Bill.
Thanks for having me. It's always a pleasure to join you.
Yeah. So, Bill, you've been, every time we have you on the show, you've been pretty bullish on equities. It's played out nicely for you and a lot of investors out there. When you look at the equity markets, Kevin Green and I talked about it last block, was the fact that, hey, we're getting stretched here a little bit, but that shouldn't really matter at this point because the data's been good, consumer spending's been good. All these, inputs into the economy and the markets have been doing pretty well, right?
Yeah, things are rolling along, and I would say that the rotations or the breadth has been a tailwind, and then the market sort of being able to rotate from sector to sector, whether it be almost day to day to week, what's going to take the reins and be the leader, has been very helpful. I mean, you think that tech really may not be the one breaking out so much. It's obviously been, the Dow and the S&P closing last week at record highs, but Apple and Amazon, they're chomping at the bit here right now too. So there's really broad leadership that's been helping these indices keep going.
Yeah, when you look at the broadening out of the market, the Russell up 10.8%, last month. So outperforming, we've seen this before, Bill, where we get a little bit of maybe too much optimism, but is there anything out there, in your opinion or in your world, where, hey, maybe we're overbought here a little bit, maybe a little pullback is warranted? We haven't had a pullback in over a year of 10% for the overall equity market. That typically doesn't happen. So is there anything out there that maybe concerns you a little bit as far as equities go?
I think if I had to pick something that would be concerning, would be maybe something surprisingly geopolitical. Obviously, there's unrest in the Middle East. You have Ukraine and Russia really at the most contentious point in 2 years. What's going on with China? And then you have Trump tweeting about tariffs. Is there something that actually pushes the envelope and has a real serious negative impact? I don't think so. I think we're in a very favorable time of year right now. I think that does continue. I think really what's most important is to see these rotations play out. And the Nasdaq has held a trend line, although it hasn't broken out like the S&P has above its early November high. It's held a trend line going back to that August low, very constructive, sort of this ascending triangle, which we really start closing out above November, is a very bullish pattern. And I do think that the Magnificent Seven, the good old Apples, Amazons, Alphabet, and Microsoft can really show up here this month and take the reins and be a leader. If that happens, then I think we have a very powerful finish to the year, something maybe above 6,200 in the S&P. I think that's very doable. But when you're talking about stretch, maybe some of the small cap move can be stretched, but then you have a constructive pattern there. We're building sort of this constructive wedge at the record high. So there's a lot of things here that tell me the tailwinds should continue. And we've been trading it from the long side while looking at potentially tail risk hedges in case the market were to have a day when it's down 2 or 3%. And that's actually paid off a couple of times in the past few months. Been able to capitalize on that from a trading perspective.
Yeah, I mean, 6,200, that's only, 2.8% above the current levels. That's after 5.2% gains for the S&P 500 last month. But if you look at the consumers doing their part, Bill, we had some of that spending data out of MasterCard spending pulse, up 3.4% for Black Friday. So this kind of lends support to this optimism out there for equities, right?
Yeah, I know my household did our part. I think we're going to keep looking at things too. So I know everybody's out there doing their part. That the data has been very favorable. So I think that continues to stoke higher prices. Manufacturing data today, I think, will be very interesting. And manufacturers just really can't get off the ground. It continues to contract. However, you look at China manufacturing PMI data late Friday was a positive note. Had a lot of numbers within there that were, if you look into the report, that were actually pretty positive. Petroleum wasn't the most brightest spot, but a lot of the numbers, I think, were starting to turn a corner there in China from a consumption standpoint. I think that's an interesting tailwind to keep an eye on. Where we have headwinds geopolitically, there could be some tailwinds percolating as well if China continues to show some light at the end of the tunnel. So there's a number of things here that I think are very, very positive.
Yep. Below 50 for these ISM and PMI manufacturing data points. they've been in contraction territory, anything below 50 for a while. It doesn't seem to negatively impact the equity market at all at this point, Bill. But when you look at maybe some of the other asset classes that are possibly affecting, we got a pullback in the dollar last week, got a pullback in yields last week. Is that also lending some optimism to your thesis here?
Yeah, I certainly do. And just to touch on that report real quick, the ISM manufacturing as well. Later this week, we'll have ISM services. The headline numbers are going to cover the actual PMI. Now, those are important, but what you really also want to keep an eye on is the prices. We don't want to see a tremendous slowness in the headline number and then rising prices expanding above 50, above those expectations. That could show signs of stagflation. That would be a headwind. And I think we've reacted negatively in the market for periods of time when that's happened here just this year. So keep an eye on that. I do think that yields should continue to come down. I think we've had a little bit of that sort of, I wouldn't call it capitulation, but the turn lower in treasuries was pretty significant, from the month ahead of the election, really ever since the Fed cut rates in September. But it got pretty steep, that sell-off heading into the election, after the election, and I think we've started to turn a corner a little bit. We've been managing risk, really defined call spreads, exposure in bonds, as well as the 2-year, looking for something to potentially turn a corner. There's some constructive patterns there. The dollar, did have some weakness last week. It had that really burst higher. There's a lot of resistance what it traded into. Now, obviously, with the dollar, it really matters what are you measuring the dollar against, and you're seeing tremendous weakness here early today in the euro from a no confidence vote in France. There's just some deteriorating confidence in the UK. That's the pound is selling off as well. So there's some really interesting things going on around the globe from a geopolitically look at things.
Yeah, and when you take a look at some of the other asset classes, crude oil getting a little bump here, up 1.3% today. But, we've been basically range-bound, Bill, here. And I think some calming down maybe in gold markets, in oil markets, has also, lended some support to equities here also. You just don't want any parabolic moves. And it seems like consolidation, confirms the bull thesis here for equities, right?
Consolidation is good. And like I said, that NASDAQ has a nice trend line that it's been responding to. You have a constructive pattern building at the record high in the Russell 2000, that record high going back to 2021. The S&P and Dow have had their move. I mean, some tailwinds. Banks have performed tremendous. Industrials have had a tremendous move. I think it's really about some rotation here where tech has to step in. And I think those big names that everybody loves start to show up here in this last month of the year. And that really gets that Santa Claus rally going later this month. And I think that's how we could finish things really strong.
Yeah, when you look at that, NASDAQ's underperformed the Dow and the S&P 500. So is that the segment that you're looking for, for into the end of the year where, hey, even if we do get some consolidation in some of these other major indices, the NASDAQ, if that Mag 7 starts ramping back up, maybe some of these chip names regain some of their traction, that's the bull thesis here moving forward.
Yeah, it is the thesis here. It doesn't really even have to be the chips so much. I think it's the bigger names, the Apple, Amazon, Alphabet, and Microsoft. If you look back at Microsoft, it's been underperforming the NASDAQ going back to almost 2 years to the lowest level. So I think some of these names, they'll need to start to show up. I think some of the negativity around the DOJ probe and things like that with Alphabet or the breakup probe on Alphabet. I think that's something that has already been priced in. So I think the negative news can really be behind us. And that's where you got to try our strategy, looking for where the puck is next. We've held a lot of these industrial names and some of the more cyclical names, we've leaned into them over the past couple of months, but now we've rotated looking for this expectation here of outperformance from some of the Mag 7. I think that's where the puck is going.
Yeah, you bring up a good point, because out of the Mag 7, only Apple hit its all-time high last week, even with the equity markets at record levels at this point. So we'll continue to watch that. All right, great stuff. Thanks, Bill. I appreciate it.
Thank you very much.
All right, that's Bill Baruch, president at Blue Line Futures.